Welcome once again to Lone Wolf Capital channel. I'm Ifeanyi by name, and this video will kick off the trading and investing lessons. And this episode we talk about lessons from my trading journey. So for me to talk about lessons concerning trading and investing, I think it will be right for me to do justice on my trading journey. So I'll begin with how I was introduced to the world of trading. So I think that was around 2007. My other brother introduced me to trading via MetaTrader. So I could remember then that was at the hype of the investing world in 2007. It was, the market was bullish as the US market was booming very well from the real estate business and all that, and stocks were climbing. Nigerian stock index was at all-time high. So my brother then was also investing with my in-law. So it was nice that period. I could remember very well being introduced to the world of trading, and I was well into it right then. Then I was just in my year 2 in uni that time. So I started trading then on a demo account as usual. Started demo account, and so just all about trying to see how you can make profit. And then I didn't really have a proper grasp of trading. I didn't really have a mentor right then. So I was trading markets. I was thinking more markets or more of something like you can even control. So that's how lofty I was that time. So from then, unfortunately, we ran into the 2008 where we had the global very serious recession. That time the Nigerian stock exchange went from an all-time high to a serious crash. A lot of people lost. My brother then lost a huge amount of money right there. So that period brought a kind of a PTSD for my dad self. Anytime he hears the MetaTrader sound, he usually gets angry. So I was then playing around with a few money I could deposit then, I think in the year 2010 self. So when the markets were recovering, playing around, trying to see how the market goes. Then I didn't really have any mentor, so it was just pure hands on deck, just seeing how it goes. So I would say the time I started taking it serious was during my service year. That was in the year 2012. Yeah, I remember very well, after redeploying to Imo State, which is also my home state. How funny it was to get that relocation then. So redeployment then. So I opened my first account with Insta Forex. Maybe small shaky. So I started then. It was all fun. It was all good. I was serving, and as I was serving, I was making money. Then I was kind of I was not even day trade. I was scalping. Scalping is a way of entering a trade and going out within 5 to 10 minutes. Sometimes at most 30 minutes. So then I was kind of news trading. News trading is whereby whenever, because I was targeting the US market, and that time I was trading Forex. So anytime the US Federal Reserve wants to make an announcement, or US economic data was about to release, 5 minutes before then, I'll be on my laptop, I'll prepare, get ready, look at which currency pair I have to trade. So that year I was doing very well. I was living my best life, right? One of my best life that time. I was making a lot of money. I think I started with $30 or something like that. I started with $30. That was even the money I got from my first alawi. As a copper, then the allowance will be paid monthly. After redeploying, they couldn't pay me for my first 3 months because of the government processing my documents and all that. So after that processing my documents, so within that 3 months, I think my alawi then was around 20,000 or so. Yeah. So I was paid 3 months alawi then. So as it came, I put some of the money to work. I think I bought about $30 through this Insta Forex. And actually, one of the things that made me use it was that they had an office in Owerri. So and I didn't want to. I was trying to avoid the hassle of opening a demo account. Then it was very tedious. I didn't really have a licensed ID or something like that. So it was easier for me then. So one of my first lessons I learned then, where I'm coming to that first. So I started with the $30. I was trading news trading then, scalping from $30, $100, $200, and one of the last trade I made then, I think the money came close to $1,000. As of then, I'm telling you, I was on the top of the world that period. So I made about, I think it was around $900. I closed the trade. Man, I was going home. I was going back to the lodge, understand? Jewett Lodge there. I was like, man, I could not, that amount of money at then, it was a huge money. I even called my brother, man, I don't blow, things like that. So on getting to the lodge, opening my system, let me see how I can even look at it to withdraw the money. I called my broker, the guy at Owerri office then, to call, okay, I want to withdraw a certain amount of money. I wanted to flex some of the profits then. To my shock, I opened the laptop and what I saw was around $100 or $150. As in, everywhere first blow. So I was like, what's happening? I looked, I saw the trade, the history, I saw the trade I closed, and I saw a deduction. Being surprised, I had to race to return immediately from Futo. I raced to return, went to meet the broker representative. Like, what's happening? I made a huge amount of money today, and only for me to get home, I'm seeing that I'm left with about $150. What's popping? What's happening? That when you say explaining to me, you will message the company, you will get back to me, you do that. I was there, he reached out to them, they reached out to him, he started explaining to me that there's a rule they have that they don't allow scalping. So then I didn't even know the name was scalping, because I just kind of saw an edge to be profitable with, which was news trading. So it dawned on me that that money is gone. It's like a penalty that they don't allow scalping. That I've done scalping to the extent that it's the profitability had to ring to the to the security section of the firm, and they had to blacklist me kind of. So that's when I called my brother, I explained to him. He told me, next time, which was the lesson, is the first lesson, before you use any CFD broker, research, do your due diligence, check. If it's easy, you can go on any platform. You can see some complaints about some brokers. Some brokers also make it open that these are their rules and regulations, things like that. And so next time, any person that is coming into the world of trading, though unfortunately for us Nigerians, we are blacklisted. Our country is blacklisted from opening a good brokerage accounts, trading accounts. Like in Nigeria, you can't open I've tried to open with eToro. So far so good. I can't open eToro, which is one of the one of the best brokers in Europe that has a wide range of trading instruments. So for we Nigerians, we have to just settle with CFDs. CFD is a kind of is a derivative instrument. You don't use, like, gives you an exposure, and most CFDs, like, you are not even trading like normal buying and selling. In a normal broking, you are going to buy an asset from somebody that wants to sell, but in CFDs, like, you are betting against the house. You understand? So you have to be very careful, do your due diligence, check the broker you are trying to open with. Know if you are a scalper or a day trader, especially scalper, you check whether they tolerate scalpers. Because if they don't tolerate scalpers, you'll be surprised. You can make a huge profit. As you want to withdraw, they blacklist you. Your money is gone like that. So you have to do your diligence. And that time, I didn't even know the Insta4 is in a Russian. So it was a hell for me that period. So the trauma I had then, I could not recover. So the edge I have, which was news trading as of that time, I couldn't do that. I'm being forced to try to see another way, a way of developing that skill in trading to be able to be profitable. So after then, I learned the harsh lesson. I started looking for other brokers, and actually it was very difficult as of then. For now, we have better brokers now, but for then it was very difficult. And based on my knowledge I have from them, based on my experience, most dirty brokers are usually open office in Cyprus and all these countries, European countries that have very lax regulation. So it's where they don't even have a physical office at times. They just register as a share company and off they go. So that's one of the very first lessons any person should learn. Check your brokers, do your due diligence. Some brokers, they are nice, but they charge a lot of commission. Some is their swap, like one of my last broker before the broker I'm currently using. My issue with them was commission. They collect a high amount of commission, and their swap rate is very high. So I had to move to the new broker I'm using. So first of all, do your diligence. So after that, on finishing my service, I looked for a job, because then it affected me seriously. I couldn't. I have to start from afresh, look for another way of trading to become profitable. So from there, I dabbled through some other brokers like Light Forex, which was also not okay. But like I said, I was basically looking for brokerage firms that have office in Nigeria, so that I can easily deposit, and also in case I want to withdraw, I will easily withdraw. So then I was trying, I'll deposit some money, I'll upload the accounts, trying to get a new edge. So my philosophy then, I didn't really believe in a demo account, because in demo account you don't experience that emotion in trading, and that emotion is what matters. So with that, you will know whether you are doing the right thing or not. So maybe you can use a demo, test some things, but once in a while you have to trade with a live account. That will let you know whether even what you are doing, whether you are disciplined, or whether your system or strategy has an edge. So fast forward to 2020. That's when I started trying to get involved with crypto. I started trying to get involved with crypto. So I would say that was my inflection point. that's I opened my first account then with Binance. As usual, Nigerian. My brother traded with Binance. I remember during that 2017 bull run, because I remember coming to Lagos that time. I visited Lagos that period, so he was trading with Binance. He opened a Binance account for me then, but I didn't really take crypto serious that period. And actually, that period, that was at the top of the market before the market started crashing. So I kind of gave it a 10-foot pole gap. So I started with Binance. I saved some money that time. Nigerian currency, my salary then, I could easily save in dollar. I could easily eke out some certain amount of savings in dollar and deposit it. So I now bought, I think I bought my first coin I bought was Uniswap. I remember then watching some YouTube channels that kind of advertised Uniswap. So I kind of like the idea of a decentralized trading platform. So I bought their coin. I think with $100 or so then, and that was when the market started kind of pulling up. It rose to I think that I made my from that $100, it rose to a profit of $700, rose to $800. So what made me so then? I remember watching this coin bureau, and that was the first time I experienced fraud, fear, uncertainty, and doubt. So I was kind of scared. I sold, took my profits. About 3 weeks later, the market kept moving. I was dumbfounded. I didn't know what to do. So that was when I was practicing. There was a strategy I was trying to employ then. So I kind of tried out that. I traded chain link then. And I remember making some good profits then through chain link. I was trading on a margin trade, So after that, I then took some profits, and I was quite good. I was making some profits then, though not as what if I was trading now based on me now. Then I would have that's $800 profit. Then I would have been on thousands of dollars in profits then. So from there I started practicing the new swing strategy. I read about it. That was, I would say, that was when I kind of encountered Paul Tudor Jones. I remember a video I watched about him. So I would say he was my mentor actually. So that was when I heard about asymmetric trades, So I started trading with weekly time frame, and also I learned that it was not profitable for me to trade using day trading. After all, I am also working, so I can't be at my workplace and be looking at my trading screen. I'm running the plant and I'm so possible. So I reasoned that the best way for me was to trade, using the weekly time frame. So from there I started testing out some strategies. I was testing and also trading. I was sure, when the market is bullish, everybody makes profit, even if you are learning. So I was making profit, especially when I traded the BNB. I traded BNB. When I bought BNB, it was less than $50. So before I knew it spiked. I made about $3,000 to $4,000 of profits trading BNB right that time before I sold them. So like they say, there's a way Warren Buffett says it. He said during the bull market, everybody is making money, but when the market start crashing, you now know who is swimming naked. So luckily for me then, I sensed when the market wanted to take a downturn, and I closed so many of the trades. I think then I my account rose up to $7,000, and at the midst of the market trying to drop, as my portfolio came down to $5,000, I closed all the trades and took the $5 profit. Yeah, I left with $5,000 profit then. So then it's silly me, with that kind of profit, I felt maybe I'm good to go. So one of my major mistakes I made then, which is also the lessons we are also learning now, I didn't have that reasoning to comprehend that okay, probably my trading should act as a wealth generation, while my day job should be taking care of my liabilities. Though I had some squabble with my manager then, out of arrogance, I would say I was arrogant then, I kind of I resigned. I was like, well, I can keep on trading and make my profit and live my life free. I mean, being a lone wolf, having a lone wolf personality, normally then I didn't really control my emotions then. So I resigned with my $5,000 profits, still trading then. Kind of even did a little tour, went to a friend's wedding at Abuja, came back, trying to short the market. But that's when another lesson kicked in. When you are trading without much experience and without any kind of backup, I said the emotions become high. That's when I knew that, in short, for you to be profitable, 80% solely lies on your trading psychology, and that's where we talk of emotions. So since I resigned, though before resigning as well, I kind of planned myself. I set aside $2,000 trading with, I think, $3,000, or is it or so. Actually, I was trading with around $3,000, but after a few months I was kind of a bit stable. But after a few months it kicked in. The money I set aside about $2,000, so about $1,000 was for feeding, and also I was applying for work then. I was felt as I was good at what I do, I could easily get a job that can be taking care of my day-to-day feeding and all that. So unfortunately 3 months went, I didn't get anything. Out of the $2,000, $1,000, I started eating into it. So it dawned on me, the emotion started in, the fear. How do I make this money? I need to be profitable. In a bear market, you can make money shorting the market, but as of then, and then my strategy wasn't refined. But also I learned the hard way that when the market's on a downturn, when you are shorting the market, yes, you can make profit, but it will not be as profitable as when the market is on a bull market, in the sense that, what I mean is that price can go from 100% to 0. So maybe you can risk, you can make only, let's say, price can be around let's say $100. The price can drop to $20. You understand? That's about 80% drawdown. Out of the 80% drawdown now, you have to, maybe each 10% could be the amount you risk losing. So maybe you can just make 5x or even 4x that if you head down to where you close, and it takes time. Based on my strategy, it takes weeks, it takes months before you realize the profit. So waiting on my hands, I couldn't maintain it. The emotion was very high. I didn't have any backup. I didn't have any proper system to keep me in check. So I started trading carelessly. I just open trades. I don't study the market. I just open trades, close trades, losing. I know. Then there'll be hope. Oh, this is a super cycle. This is a super cycle. This is a super cycle. I'll enter some longs where I'm not supposed to long the market. Before you know it, the market goes against me. I've lost. Before you know what I'm saying, from $3,000 trading accounts, I started seeing 1,000. All hell broke loose. So I was from there. The fear was higher. Out of the $1,000 kept, I had to pay for my rent, house rent. I paid my landlord, hoping I'll get a job easily. I couldn't. So that's when I learned the lesson that is, yes, you can trade for a living, but you need a certain amount of capital base before you say, okay, I want to trade for a living. If you're in Nigeria right now, let's say as a Nigerian, if you have a market capitalization of $100,000, yeah, it might be safe for you to trade for a living. But I kind of learned that rather to trade for a living, have a business, have something that generates you cash flow. If you don't want to be employed, fine. That means you have to have enough money to set up a business that can generate you that monthly cash flow. The cash flow will take care of your liabilities, your day-to-day living, while your trading portfolio or investing portfolio is simply for wealth generation. So in doing so, you will not be pressured to deviate from your strategy or from your trading system. So you will be at a calm state. Your trading psychology will be at the right place. So when you are trading, you don't make some silly mistakes, some bias trades and all that. So that was one of the major lessons I learned. You have a job. Luckily for me, the following year, my former colleague, called me. We need your expertise. Luckily for me, I didn't resign in a bad way, so the company absorbed me back. So that is one of the lessons I will tell anyone. Even if you are very profitable, don't rush to depend on trading as your way of living. Have a cash flow separate from your trading or investing. Let the investing just be a wealth generator, while your business or your salary takes care of your liabilities, your day-to-day living. So maybe for as a Nigerian, if you are having $100,000 plus or more, then maybe from there you can say, okay, set up a business, something that you are sure that can generate you cash flow. Maybe you are not going to be rich from that business, but at least something that can keep you stable. And also better, profitable if you also have your own accommodation. Once you have the accommodation, that fear of rent and all that will be off. So these are the ways you can create a kind of foundation for you to trade without emotions. To have your trading psychology at the right set is one of the different things that leads to you having a good trading psychology, which we are also getting to there gradually. So that is one of the lessons I also learned the hard way. Not to expose myself to trading emotionally. So when I came back, good for me, I still had some money to to keep trading. So I kept on refining my strategy, my swing trading strategy, until I would say from 2024 I started having some consistency in my trading. So what led to that consistency? Yes, trading within the weekly time frame also helped me, see the market at a different perspective. It's like having a map. If you zoom into a map, you might see some certain things that somebody on the landscape might not see. Then if you also zoom out more, you will see, you have a good observation of the environment very well. So that's just the way time frame is. Day traders trade with hourly charts, some even 30 minutes, 1 hour, 4 hours, 6 hour, or a day candle. You will not get a good comprehension of what is happening in the market at a longer time, at a long run. You will usually be swept up by fake outs, especially during this Trump presidency. Day traders are not having it at all. It's killing day traders seriously. So that's what I learned from that. First of all, okay, during my early years, during the early 2020s, that okay, I moved into weekly time frame, but I didn't have a proper philosophy behind how I'm going to have an edge, trading. So from there, I had to go into risk management. So for the risk management aspect, that's one of, if you can take care of your risk management, you've solved also another great deal of a trading problem that usually kills accounts. So in risk management, that's where you have to manage your position sizing. For example, you have like $1,000 as your trading capital. It's best not to risk more than 1% for any trade you are taking, because if you risk more than 1%, you expose yourself to some certain fear and bias, in the sense that, and also overexposure. Now you take one trade, that one trade is not the only trade you might take. You might take the second, you might take another trade, different instruments can give you, an entry signal. So if you risk 1%, that means it might take you about approximately almost 100 trades. I'm just being simplistic, to be less than 100, but just trying to be simplistic. Just imagine losing 100 if your system has an edge. Because, for example, my system for a particular instrument, I might have 3 bad entries. Market might not go according to what it signals me is going to go. Most likely like 3 or 4 times. Maybe in the 5th time, the trend will become clear and I can start making profit from that particular instrument. So with that, it gives me more opportunity. Once your capital is there, you can live to fight another day. So it gives you more chance for you to play out your edge in the market. So if you increase your percentage to be the capital to be risked more, from let's say 1% to 10%, 10 out of 100 means just being flat. Maybe in less than 10 trades, if you have 10 bad trades, you've blown up. Or if you opened even 5 positions, exposing yourself with 10%, it all takes almost 5 or 6 trades for you to blow up that account. So, but if you reach 1% of your capital for a particular trade, if it fails, or even if it ends up close to 1% or 2%, if it fails, you can live to fight another day. But when you risk a higher percentage of your capital for a single trade, you put yourself on short. Once you open the trade itself, your emotions kicks in immediately. It kicks in immediately based on the spread. It kicks in immediately, especially when the market starts going against you. The market can become positive before you know, you can be sweaty and you close the trade and market starts going to your direction after some days or so. So that's part of risk management in terms of capital allocation for trades. Then also you now talk of the position sizing. Now the position sizing has to do with for me, I use volatility to determine what price change will I risk for that particular 1% of capital to be risked. So for example, let me take you through this Nvidia, for example. I think some time ago, I think this markets, there's an entry signal around this area as of last year. So if I want to enter that trade now, I might have to risk a certain amount of position. For example, I use a kind of dynamic support and resistance channel. So I could risk from here to the point of entry here. So for example, this might give me, I have to risk about 12.56 price change for this particular trade. So I have to incorporate that price change with respect to the percentage of capital I have to risk. So before you trade, like me, I have an Excel spreadsheet. I have a spreadsheet where I do where I've prepared a calculation already on what to do. So for example, for the CFDs, I already have a spreadsheet whereby if I want to enter any trade, you can see this part is this first column has to do with the capital I have, and this is the percentage risk. The capital, then to calculate the capital out to risk. For example, if I have an assumed $3,000 capital and I want to risk 1%, that means I have to risk about $30 average. I have to risk, I'm planning to risk about $30 for that trade. So next thing, I have to impute the pips risk. That's the price change. I'm able to say, okay, if the price move towards this amount of money I should be risk, that should be my loss. You understand? So once I impute that, I can get the lot size that I can place for that trade. Likewise, if it's in terms of perpetual futures, you also do your own calculations as well, in a way that you can now determine, okay, you incorporate the price change and also the capital you are going to risk. So in doing so, this will now settle your risk management side of trading. So when you want to trade, you can now trade conveniently. Maybe in a separate episode, we will delve more into this risk management, and I will explain better with more good examples as well. So for now, let's just go on with my life experiences and my trading journey and the lessons I've learned so far. So that is where we also talk of risk management towards the part of being profitable. Because definitely you will lose some trades. Actually, this method of my trading methodology, swing trading, in swing trading, definitely my win rate will be lower. What makes me profitable is the reward to risk ratio. So if I'm entering this trade and it works out, I can make about 10-20x of what I risk. So it can cover for some of the losing trades I made, and I'll see. So if for example, if out of 100 trades, because that's where we will now involve the loss of large numbers. Loss of large numbers is trying to say that after a sample of, let's say, thousands of trials, you can see that maybe your win rate could be 30%, but the winning trades can amount to 20x profit, 30x profit. Even if there are some backtests that have done, especially in crypto side. Crypto can be dangerous, but the reward to which is usually high based on my own trading system. For example, during that year 2020, I tested Dogecoin, for example. It gave me an entry signal around the mid of the year. Around the embark period of that year, I think the entry was around the September-October period. So after that is my backtesting with this my particular trading strategy I use. So if I enter that trade risking, let's say $100, I was sure to walk away with about $250,000. No kidding. I tested, okay, if my risk, what I was to risk was $1,000, automatically I will be entering in millions. So that is a good thing, yes, but you have to, it will result to you having more losses. But the win, when the market starts trending, it will be very, very profitable. So that's what we talk about asymmetric trades, or even some certain asymmetry, I say continuation, not actually changing of trend. Sometimes you can also make a lot of money trading continuations as well as trend change. So that's that part of risk management. It's more like giving you a chance to fight another day. So that's for when we talk about risk management. Then you talk about what instrument to trade. I think Marcel also, they say volatility is life. So that rang to me. I said, okay, if the market becomes volatile, usually you usually make a lot of returns. But I kind of reasoned to my psychology, to my philosophy then, that what I kind of look for, I try to enter when the volatility is low, and then once the volatility starts expanding, you become profitable. So I now thought, okay, what factor can I use to determine if such instrument, or asset is good for me to trade using this my trading system. That's when I came into beta. In another episode, we'll talk about beta, gamma, and the rest, but I usually use beta. So I saw that the higher the beta, the better that instrument is good for me to trade asymmetrically. So it's just about the volatility. It's mostly about volatility. So once I see an instrument that historically is very volatile, I trade that particular instrument. That is one of my trade secrets, but I'll just let that go. Anybody, beta is not a new thing. Everybody can. Though so many people avoid instruments that are beta because they want to trade safe, they want to invest safe, but safe is not invest. If you want to trade as an aggressive trader or speculator, you have to embrace volatility. If not, you just go into bond market, But the bond market is not for growth. Bond market is for wealth preservation. You understand? So I'm not a billionaire. It's where you're a billionaire, you can now say, okay, I want to channel a certain percentage to preserve my wealth. That's where bonds comes into play. Though I also trade bonds. I can trade bonds as a speculator as well. So that's one of those things. So lastly, I'll now talk on importance of trading psychology. Like I told you when I resigned, when I hurriedly resigned, it dawned on me that trading psychology solves. Once you take care of your trading psychology, you've taken care of about 80% of the problem in trading. I'm telling you, it's not about getting the right system, getting the right strategy. Those are also important, but once you're able to incorporate your trading psychology to your trading system, then you are good to go. And that's what gave me assurance. I've been profitable since 2024. I would say from 2025, in short. Even as President Trump has been shaking the market, and whenever he shakes the market, I will just laugh. I will just laugh because I just follow the market. I don't trade based on opinion or emotion. So once you have a good trading psychology incorporated in your system, I develop my system whereby it puts my emotions in check. The only area that still kind of touches me is crypto, because crypto is the purest form of trading. It's human sentiment at its finest. So I would say it's just about me trying to grow my capital. But if I just follow my trading system, which I incorporated, I fortified my trading system to put my trading psychology in check. Once you do that, you'll be profitable no matter what. You'll be very profitable. So that's the part of trading and how to maintain. So you want to maintain a good trading psychology, you have to incorporate it with your trading system. If you're a scalper, you have to have a way of incorporating trading psychology to that your scalping method. You understand? No matter whatever you do, whatever edge you have to fortify yourself such a way that you always maintain a healthy trading psychology at any time. Even if you are married, even you have a family, try to have a way that you keep off that stress, what to provide for family. Like I said, have a cash flow separate from your trading, whereby it takes care of your liabilities. Once you do that, it puts you at the right mindset. Trading is not meant for your daily living, especially when you are building an account. Trading is meant for wealth generation. Then when you generated that wealth, now you can now take from that your wealth to cook yourself more into having more means of having more cash flow. So when you have a means of having different businesses or things that generate cash flow for you, other investments that generate cash flow, then your trading and investing psychology will be at the right track. So that's just my trading. The lessons I've learned from my trading journey since 2007 that I was introduced by my dear brother, and I really thank him for. I really appreciate my brother. That's the short. If I was to give an award for firstborn, I'll give him the award for firstborn. So he kind of gave me a lot of exposure to so many things, and I'm very grateful to him. So that's it, folks. Same channel. Some days I can drop another episode on under trading lessons, trading and investing lessons, and weekly, of course. By the end of this week, and that is Sundays to Mondays. Between Sundays and Mondays, I will drop my Grow With Me. I'll drop another video under my Grow With Me playlist where I go through my trading weekly trades. So that's it, and I hope to see you guys next time. Please don't forget, subscribe and like this video. It helps with the YouTube algorithm to keep on showing you my videos as well, and also for other other Nigerians and other people to be able to see my content, so we all learn and grow as well. So thank you for that, for staying with me in this video, and I appreciate it. Please, anything you feel you can share with me to improve my channel, I'm new to this. Anything you can contribute, I don't mind. Even if a constructive criticism is important for me to grow, to improve my channel, and hopefully I can even start a podcast. Well, with time we'll start a podcast, as I'm still learning how to run this channel. So thank you for everything. Please don't forget, like and subscribe, and also drop comments in the comment section. Thank you. See you next time.